So therefore, one of the results that we're expecting, a banking major, HDFC Bank. Let's go through what is the expectation. What are markets looking at?
So yes, Shweta, India's largest private sector bank will report its Q2 earnings today. It is expected to come after the market hour, so perhaps the market will only get to react to it from tomorrow. But this morning also the stock is down about 0.5%. Now, talking about the results are expected to be muted in this quarter, given that this will be the first quarter where earnings announcement will also include the results of HDFC Bank. So I have not taken profitability figures because on a year-on-year basis they are not comparable. But in last month's analyst meet, HDFC Bank's management said that return ratios will be affected for the next couple of quarters because of higher provisioning and interest coming under pressure. So if you look at the numbers of HDFC Bank, the provisions are expected to increase to about 30,000, which will have an impact on the gross non-performing asset as well as net non-performing assets. So gross non-performing assets in this quarter are expected to be at about 1.4% compared to 1.2%. So this will be a 20 basis point year-on-year rise, whereas net non-performing assets will be at 1.3% versus 1.1% in the year-ago quarter, given also a 20% BPS rise. Now, net interest margins will also are expected to come under pressure. They are expected to decline from 4.1% in Q2 FY23 to 3.5%, which is about a 60 BPS decline on a year-on-year basis. Return or assets are also is expected to take a 40 BPS hit from 2% in the year-ago quarter to 1.6% this quarter, last quarter, sorry.
All right, that of course is HDFC Bank. Gaurang, what are your big expectations? What numbers will you be keenly eyeing?
Well, I think there could be a little bit of squeeze on the NIMs. Asset quality is definitely going to give you a positive kind of number. Not to forget, we've seen a merger of HDFC Limited into HDFC Bank. Merger to play out at ground level may take a little bit of time. And I remember very well, Shweta, when the merger was taking place, all of us were extremely upbeat about it. We still remain upbeat about the merger. It only takes a little bit of time to play out as far as the earnings and adjustments are concerned. So not extremely concerned about this quarter, slight disappointment, if you will, on the NIMS front, on the margins front. But long term, we remain positive on HDFC Bank. And I think if my memory serves me right, Shweta, targets are somewhere beyond 1,900 on HDFC Bank.
Right.
But Gaurang, you are obviously optimistic about the long-term prospects of the bank. But given that the results are today and the expectation is that return ratios are going to get impacted, do you expect some sort of a correction in the stock prices? I mean, in the last 1 month, we have seen the stock fall about 6% or so. But in the last 5 days or 5-6 sessions, the stock has consolidated at about 1,530 sort of levels. But do you see some bit of correction after the results?
Well, I don't think there's going to be a long life for HDFC Bank share price sub 1,500, to be very honest. I hope I'm right on that. Since the numbers are today, don't want to jump the gun, Shuyash. But if you do get an opportunity, and stocks like HDFC Bank, you have to look at the historical track record. Even when HDFC Limited was there, HDFC Bank, these have been great wealth creators in individual portfolios. And I don't think you can write them out just because you get disappointment for 1 or 2 quarters. You have to look at the broader picture.